This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 18th, a Thursday, at approximately 8:44 in the morning Mountain, and it's 2014. Our radio show runs on your favorite radio stations. Our show runs on 630 CHED in Edmonton, Sunday at 3 in the afternoon. The shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We're portable. We go on any of your devices, iPhone, iPad, whatever. We're there with you, and you can take our radio show, and we're portable. We also have a newsletter. Get our free weekly newsletter. If you're not getting the World Financial Report on Radio newsletter, you're not getting the companion to our radio show. You're not seeing the stories that Harold and I are talking about. You're not on the same page. If you're getting another newsletter, get your name on the list. Connect with Harold at rarecoloreddiamonds.com or call him at 1-800-432-1022 and get our official World Financial Report on Radio newsletter, the companion to our radio show. This week, the Federal Reserve met, and they kept interest rates, no surprise, where they are. And they said that they would keep them there. The wording was considerable time. Speculation is they may raise them maybe at the end of 2015. They did pull back a bit on the quantitative easing by $10 billion. Also, beef tops $4 for the first time, up 16% for 1 year, 5 years, 88%. And yet we're told no inflation. The U.S. budget deficit for 2014 going to be around $600 billion. And as well, the United States being taxed the most they have ever been in their history. We talk about bull markets in financial markets. 47% of the NASDAQ is in a bear market. So it goes to show that sometimes you can have stock markets going up, but a huge percentage of that index is going down or in a bear. It's only a few stocks that are driving it. Americans, their credit card debt hit a post-recession high. France's super rich have taken their money and moved it to Belgium. About 1/5 of the super rich have moved $17 billion to Belgium because of oppressive taxes in France, and we're talking 90%. Also, U.S. President Obama coming out and saying that Ebola is spiraling out of control and something must be done. As we tape our show today, Scotland is voting, and from what we understand as we tape our show, it's very, very close. They're voting to leave the UK, and we'll know, obviously, later today whether or not that happened, but it could cause some problems for the financial markets, Harold, if Scotland does decide to move on. They're sort of opening up Pandora's box. As we know here in Canada, with Quebec wanting to separate, it was very close that they voted to stay. And if Scotland votes to leave, I think it opens up a whole set of circumstances that no one really knows what will happen. And that's why we advocate having hard assets in your portfolio as an insurance policy.
You're right, Randy. Again, things can change very, very quickly, and obviously nobody knows exactly what the financial implications would be if Scotland does leave, but I think it could be disastrous. You know, you're taking away a major part of the United Kingdom's income. It's going to affect the currency markets. It's going to really affect an awful lot of markets. But we're going to have to see what happens. It's a very close vote at this point. We're taping the show early, so we're not going to see the results till later on in the day. But again, it should affect the currency markets in a big way. You know, at this particular point, it's the week where people are just getting back to work, getting back kids to school and that type of thing. The markets have been a bit lethargic for the last couple of weeks. In fact, gold, because of a lot of uncertainty in the market, has fallen quite substantially. Actually, last week the market was down every day, and so far this week the market's been down 3 out of 4 days. Now, The reason for that is that there's not much happening in the market at this particular point. There's a lot of uncertainty. But what is happening is that because of the recession in Europe, where you've got Italy and Germany in recession and many other countries are going to follow suit, what you've actually seen is that the euro has dropped. Now, this may sound confusing. The U.S. dollar is stronger, but it's not because investors are buying the U.S. dollar. It's that they're selling the euro because the euro is a weaker currency. It's dropped from 139 to 129 within the last month. So it's not that people are bullish on the U.S. dollar at this point. It's that the currencies that the U.S. dollar is pitted against, a basket of currencies like the Swiss franc and the euro and the Australian currency and the Canadian dollar and that type of thing, the U.S. dollar trades against a basket of foreign currencies. And again, with a recession going on in Europe at this particular point, which only looks like it's going to get worse and worse, it affects the currency markets in a big way. Again, you've seen more than a 10% drop or close to a 10% drop in the euro just within the last month. Now, we do anticipate that the recession in Europe is going to get worse. I don't see how it's going to get any better because they're not doing anything to help it. So basically what's going to happen is the euro will continue to fall, but unfortunately, because Europe is in a recession and it's going to spread, it is going to hurt the recovery, I put that in parentheses, here in the United States, and that should affect the markets also. So we're going to see what happens over the next couple months, but there's no doubt that you got to keep your eye on the currency markets at this particular point because you've got two major situations. You've got the vote coming up in Scotland, and you've got the recession going on in Europe. And again, you know, you look at the stock market here in the United States, and because they didn't raise interest rates, which would actually have strengthened the dollar even further, you know, the fact is that the stock traders are euphoric and you're seeing the stock market go up. They don't look at anything else but interest rates and cheap money at this point. It's got nothing to do with the economy. It's got nothing to do with how well the retail business is doing or anything like that. All it's got to do with at this point here is that the people that understand what to do with cheap money, when you can borrow money at 2 or 3% and you can use it in your business or make 8 or 10%, obviously people that know how to do that are going to take advantage of low interest rates, and that's another reason why they feel the economy and the overall business is getting better. But again, I can assure you that that is not the case. I'm a Canadian living in the United States. I've lived here for the last 30 years, and the bottom line is that the U.S. is not doing well economically. The middle class is hurt very badly. They've never recovered from 2008. The job market is pathetic. Believe me, the job market is pathetic in the United States. And the fact is that the numbers that they put out are only for the benefit of Wall Street. They put out numbers that look a lot better than what they are, only so the stock market will stay up. Why do you think that they kept interest rates so low? Because they're so concerned about the stock market and about the real estate market. Again, it makes sense for them to do so. They don't want to hurt those two markets because those are the two areas in the United States that are starting to pick up. The real estate market is picking up a bit, mostly in rentals type of thing. So what do we see for the market over the short term? The gold market right now is trading at $1,227. It's dropped off quite a bit from the $1,300 level. The next major level, forget about the smaller ones, is 1180, and that's a very heavy support level for gold because that's where the market came down to in 2011 when the gold market went from 1920 down to 1180. So 1180 is a very, very important support level, and it wouldn't shock me in any way to see gold sitting at that level, which I have no problem with. Again, we've talked about this on every show. We're not trading gold. We're not buying it and selling it. We're holding it as a hedge against what's coming forward. You don't know when these markets are going to make their moves, but they are going to make their moves. There is no doubt that gold is a very strong investment, and even though it's not a lot of talk about it at this particular point on a positive view, the fact is that that's a good situation because gold is got a very strong base at 1180, and there are very strong fundamentals for gold to go substantially higher. In actual fact, myself personally, where I do own a lot of physical gold and silver, I am personally planning on getting into the gold business. I think that gold is going to be a tremendous buy. And at this particular point, I know we mentioned it over the last few weeks that we're working out our deal with the mines in South Africa, but they're dealing with their own issues at this particular point, which is Ebola, and nothing is coming out of Africa at this particular point. In fact, the media barely even talks about it, but the numbers are absolutely astonishing. I believe it's around 20,000 or 20,000 people at this point here that have been affected by it. And again, there's nothing coming out of Africa that's being exported at this point. Everything is dangerous. So we're working out our deal. I'm a firm believer in gold and silver. I think prices are going to skyrocket. I think gold is going to go way higher than the $1,920 that we saw back in 2011, and I think silver is going to go substantially higher than the $50. We have to let the markets play out, and again, at this particular point, with keeping interest rates as low as they are, the fact is that gold is trading in a range. But it will break out because of the real reason why we're buying gold is because of currency devaluation and inflation. Randy read what beef prices are doing, and that's only one of the food groups that have gone up tremendously this year. If most people's income is not going higher, but the cost of living is going higher, that's inflation in its most simplistic terms, and that's what we believe the future is bringing. And the fact is that once inflation does hit, and hit very, very hard, that's when you're going to see interest rates go up. Don't forget, in 1980, 1982, when we had huge inflation, we had interest rates at 22%. That's the solution for inflation, and that is what's coming. So when I say that we don't trade gold and silver, we don't. You're buying physical gold and silver. You don't buy physical gold and then a few months later take it back to where you bought it and sell it to make a couple dollar profit or a few dollars loss, and then buy it back and forth. The commissions and all that will kill you. And along with the fact you're going to wake up one day and the price of gold will be up $100 or $200, and you're going to miss that entire move. So the fact is that we buy gold, we buy silver as a hedge against currency devaluation and inflation, and there is absolutely no doubt that that is within the foreseeable near future. So just hold on to your gold, and if the price gets low enough, buy a little bit more of it. Average down your position. But don't do it in paper. Buy it, own it, take it home with you, own your own gold and silver. Very soon, when the time is right, we will bring our gold and silver to you. And again, it'll be for your benefit to be able to own gold and silver at spot prices. We're not looking to make commissions on it. We're not looking to make spreads on it. We're looking to make certain that when the time is right, that our clients are in a position to make certain and ensure their financial future. Randy talks about it all every week. We talk about having insurance on your home, insurance on your car, insurance on your life and your health and everything like that. Why in the world would we not want to have insurance on our financial situations? And that's what gold and silver and diamonds and art and all these alternative investments, that's why they're so important at this point, because of the total uncertainty of what's happening around the world. You've got geopolitical situations that are very concerning and scary. I mean, what's going on with ISIS, and now the U.S. is getting back into a war with ISIS, that could be a huge concern. There are rumors and concerns that some of these terrorists may have gotten in through the borders through Mexico and into the United States that way, the way everybody else is getting in. So, again, there's some very frightening situations on the horizon, and if you don't protect yourself, when they do hit, it's going to be too late. What you need to do is, if you're a firm believer in what we're talking about, and it's not only us, there are brilliant analysts that are saying the exact same thing as we are. It's only a matter of time, and I think it's a short period of time until you see some situations that are very detrimental to the marketplace that is going to skyrocket the price of gold and silver. And the reason that I say that is that when nobody's paying attention to that market, don't forget, when we first started this show back, 14 years ago type of thing, and gold was at $250, nobody even mentioned the word gold or silver. We saw something happening in the marketplace that reminded me of the 70s and early 80s, and that's why we got back into gold. But nobody was even talking about gold back then, and it went from 250 to 1900, one of the biggest bull markets of all time. We're going to surpass that again. There is no doubt in my mind. But the fact is that you need to own it before the fact, not after. So, Randy, again, what's happening in the markets right now are not concerning to me in any way, shape, or form. In fact, it's understandable and it's predictable. The market will probably come down to 1180 in gold. It may come down to the 1650 level in silver. But again, if it does come down to those levels, we want to be a substantial buyer. And again, if we didn't believe that gold and silver was a hedge against these things coming forward, we would never, ever recommend it to you. It's not something that we make any money on. It's a recommendation that we believe in that will help our clients and our listeners do better in the future, and that's what this radio show is all about. If I'm offering you gold at spot prices with no commissions, there's only one reason for it. It's to make certain that when this move does come, that the listeners to the show are in a position to protect themselves and hopefully make some money.
The most secure and profitable investment, millions of years in the making. Rare colored diamonds. Diamonds are nature's art. Private, portable, stable wealth. Speak with Harold Siegel today about starting your own diamond investment portfolio, or receive a free copy of our free weekly World Financial Report on Radio newsletter. It's proprietary. If you're getting any other newsletter, you're not getting the World Financial Report, and you want to get it from us so you can see the stories that we're talking about on a weekly basis. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call him and speak with him personally and privately at 1-800-432-1022, 1-800-432-1022. As we were touching on the last show, and I really believe this is the case, and most people are really understanding this now, that Federal reserves and central banks around the world are manipulating all markets. As a result, you see something like gold that should be thousands of dollars being managed. As a result of it being managed, normally it's the canary in the coal mine when tough economic times are coming or there are problems. But because it is being managed in the short term, it's like turning off, as we spoke about on the last show, a smoke detector or a fire alarm because it's making a noise you don't want to hear. The truth of the matter is that's very, very dangerous. We could wake up one morning and find out things have gone sideways, similar to 2008 and 9, and people will be very, very surprised because there was no canary in the coal mine due to this manipulation and management. But one thing we do know, we can take care of ourselves and have that insurance policy in our portfolio at all times. Diamonds, gold, and silver. Speak with Harold about investing in diamonds, gold, and silver at rarecoloreddiamonds.com or 1-800-432-1022. One of the things we've also talked about on past shows is that you can't buy the fire insurance after the fire. You need to get it beforehand, and now's the time to have that fire insurance due to what's happening in the financial markets and geopolitically. Silver is at a tipping point, according to bullionstar.com. We have this in our newsletter, as inventories of silver on the Shanghai Futures Exchange have been in a continuous slide, and the price discount to London spot prices is at the lowest level since September 2011. The conclusion from the bulls is that silver is primed to move much higher. Read that story in our newsletter. Also, John Embry from Sprout Asset Management came out and said, I would like to speak about silver and the silver market for just a minute. Silver is in a total lockdown mode. As you know, silver has been pounded down to near the recent lows since coming off the $50 high. Last week, one of the several sharp down days, the open interest on the COMEX rose by more than 6,000 contracts, or more than 30 million ounces, to nearly a record. This is contrary to the general action in silver. On particularly weekdays in gold and silver, open interest has tended to, with contracts as longs capitulate and the winning shorts book their profits by covering their short positions. What's going on now? In the silver market, there appears to be a resolute long who has deep pockets and is prepared to take on the cartel. If that's the case, with the shortage of physical silver in the world and on the COMEX, this could get very interesting when the worm finally turns, to put it mildly. I'm very excited about the war in the silver market and the implications for higher prices. Also, the silver ETFs around the world are sparking interest due to the price pullback. In fact, silver ETFs, the amount of physical silver that are in them rose to record highs as people are starting to put money into ETFs due to the pullback. And obviously, we don't believe in ETFs. We believe in having the physical precious metals obviously stored for you or in your own hands. One of the interesting interviews, and we have about 3 minutes left in our segment here, one of the interesting interviews from the week, Greg Hunter, formerly of CNN, interviewed John Embry, and John Embry said, gold and silver, the end game is here. Investment strategist John Embry says the market manipulation in gold and silver is coming to an end. How close? He thinks we're very close in the sense that the physical supplies of both gold and silver are now diminishing at a fast clip. I just saw Indian imports for gold were up 176% in the latest month. Basically, all this gold and silver is headed from west to east. And I think it is a very, very disturbing development for people who live in the West. The timing of it remains imprecise. I think because of the takedown in the paper market is so aggressive at this point that there's something that is going on behind the curtain that suggests to me that certain things are getting very close to reaching ahead. We won't know until it happens, but you've got to be right on the side of this trade that the moment that it happens, you can't be late. Embry goes on to say, I've never seen more negative sentiment in the sector at a time when both gold and silver are remarkably underpriced. I think gold and silver are as cheap today as any time in their histories. This is in relation to the amount of money out there, the cost of credit, the cost of digging it out of the ground, and etc. Nobody is interested in buying it, and to me, this is one of the greatest buying opportunities of all time. And one thing that John Embry went on to say is that if we did see a further pullback in gold and silver, a lot of the gold and silver mines that are out there would literally have to shut down because due to production cost, it would make no sense for them whatsoever to pull the gold and silver out of the ground. Harold, we have about 30 seconds left.
Well, that is 100% true. The lower the price of gold and silver goes, the less there's going to be on the market, and that will spur another huge bull market. So that's another major reason why you want to own gold and silver down at these levels. And if I'm right and gold comes to 1180 and silver to 1650, again, there's hardly any downside risk to the market whatsoever. So I think we're getting ready for a very big buying opportunity. That's why we're bringing some gold and silver to you at amazing prices, and I think the market's getting ready to run again. So these are going to be exciting times coming up as long as we do the right thing.
Connect with Harold Siegel at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call him at 1-800-432-1022. That's 1-800-432-1022. Learn about investing in diamonds, gold, and silver hard assets. If you listen to our radio show, get our free weekly newsletter. If you're not getting the World Financial Report on radio, you're not getting the proprietary stories and the newsletter that we are seeing on a weekly basis. Get it from us. Connect with us at Rare Colored Diamonds or 1-800-432-1022. Coming up next, we'll continue the World Financial Report on radio with Harold Siegel and me, Randy Marshall, right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 18th, 2014. Our time is 9:09 in the morning Mountain. And obviously, as we tape today's show, Scotland is voting to leave or stay in the UK. And we will not know that until later today, and it could cause some interesting ramifications in the financial markets if they choose to vote. Obviously, we will have more on that next week. To connect with Harold, to invest in gold and silver and diamonds, speak with Harold at rarecoloreddiamonds.com, the telephone number 1-800-432-1022, Harold's auction website. We'll have auctions coming up very soon. We'll let you know about them. His auction site is hsfineauctions.com. The next auction we will definitely let everyone know about. the minute that we have decided to go ahead. More than likely, we're looking at October. Our featured diamond of the week from rarecoloreddiamonds.com is a ring, and it is absolutely gorgeous. It's a .56 carat, emerald cut, fancy, intense, yellow, internally flawless diamond ring set in 18 karat white gold. We have a picture of it at rarecoloreddiamonds.com under featured diamond of the week. We also have a picture of it in our free weekly newsletter. Harold has been on Fox Business News within the last month, and he was interviewed by Deirdre Bolton. If you would like to watch that interview, we can send it to you. Harold has been on Bloomberg Television twice. He's been on Bloomberg Radio twice, and he was on the Jerry Bovino show. And if you really want to get to know Harold Siegel well, I would watch the Jerry Bovino interview because it's an hour long, and Harold really gets into not only talking about himself and his family, but why you want to invest in hard assets. In our newsletter this week, we have stories that we want you to know about because you're a diamond investor or want to be. Petra's Blue Diamond sold for $27.6 million this week. De Beers coming out and warning diamonds aren't forever. And they're talking about the fact that no new diamond mines have been found, and diamond mines that are currently operating are being depleted. Also, the pink diamond supply is dwindling. We have that story. That is a must-read. In fact, it was interesting to note, and this is something that I did put in our newsletter, that if you compare Argyle from the Argyle tender, if you compare those with white diamonds, between 2002 and 2010, the index price for diamonds from the Argyle pink tender increased 108%, while diamonds that are white rose 22%. We also have Lawrence Graff unveiling some outstanding, just stunningly beautiful colored diamonds, one of them being a fancy yellow diamond, and a 3.37 carat purplish orchid diamond is being unveiled at a Hong Kong jewelry show as well. But Harold, interesting to note the statistic that I just read there, 108% versus 22% for those invested in pink diamonds versus white diamonds.
You bet. And we've been saying that for a long time, and it's only going to get better because there's not going to be any pink diamonds very soon. By 2020, the Argyle mine that produces 95% of the world's pink diamonds is going to close down. In actual fact, the amount of diamonds coming out of the mine is dwindling tremendously, and the quality of diamonds is falling. In fact, at last year's tender, where they take 55 to 65 of their best diamonds, over a half a carat, and take them on tour so high-end dealers and jewelers can view them and buy them. Last year, record prices were hit on every diamond, and 40% of the diamonds were I1 clarity, means that you could see the visible flaws with your eyes, and they still sold for record prices. That's how valuable Argyle pink diamonds are. And again, when there's no more of them, just then imagine how much in value these will go up. We're anticipating 1,000% over the next 10 years on pink diamonds. And these are not big diamonds. They're the most concentrated form of wealth in the world. 95% of the diamonds that come out of the Argyle mine, which are pinks, are under a quarter carat. And just so you know, we're not talking a lot of diamonds. If you take the entire year's supply of Argyle pink diamonds and put them into a champagne glass, basically you won't even fill the whole glass. You're talking maybe 200 carats a year. You're talking the most concentrated form of wealth and an opportunity investment-wise that probably will never, ever come again, because the Argyle mine in Western Australia is the only mine in the world that produces 95% of any particular diamond. So, for example, most diamonds are white. In fact, only one diamond out of every 100,000 diamonds is a colored diamond. And just because it's a colored diamond does not mean it's an investment quality diamond. In fact, if you look at the Argyle mine, which is in Western Australia, in the East Kimberley region, it was actually discovered in 1986, owned by Rio Tinto, one of the largest mining companies in the world. And basically, this mine produces 30 million carats of diamonds a year. But out of 30 million carats, less than 2% are investment quality diamonds. The rest of them are industrial quality diamonds that are used to cut other diamonds and that type of thing. So when you're looking at all these diamonds that come out of that mine, only very few of them, a handful of them, are these amazing pink diamonds. And to give you an example of how much they go up in value over time, they're not short-term investments. You don't buy an Argyle pink or any colored diamond today and look to sell it in 2 or 3 years. It's a waste of your time. You're not going to make any money. But to give you an example, my wife's girlfriend, she inherited a 4-carat pink diamond ring from her grandmother. Her grandmother bought the diamond ring 50 years ago for $50,000, and the diamond today is worth $4 to $5 million. I'll say that again. 50 years ago, they bought it for $50,000, and now the diamond's worth $4 to $5 million. What a lot of people do when they buy diamonds is they keep them in the family and they hand them down from generation to generation. I bought an Argyle pink diamond at the Argyle tender back in 2003 for $350,000, which at that point was a lot of money, and now the diamond's worth close to $4 million. So that's how much these diamonds go up over time. You know, if you're a longer-term investor, these are amazing investments for you. They're so rare, they never, ever decline in value because there's so few of them. And the fact that the mine is going to close down means that if you're one of the fortunate ones to own one of these diamonds, you could be looking at a $100,000 diamond today is $1 million diamond in 10 years from now. And basically, again, these diamonds never, ever fall in price because, number one, they're so rare. Number two, there's so few of them. And number three, the most important, is that the mine that produces them is going to close soon. So an opportunity like this will not come around again. And those of us that take advantage of it realize that this is an opportunity over the next 6 to 10 years to make a tremendous amount of money, and we will not have this opportunity again. So they're not inexpensive. To get involved in the Argyle pink diamond market probably costs $50,000 as a minimum investment, but a $50,000 diamond today could be $250,000 investment or return to you in the next 6 to 10 years. A lot of our clients buy these type of investments for security and for retirement. Again, if you're in your 40s or 50s and you buy an Argyle pink diamond and put it away for 10 years till the mine closes and there's no more pinks left, you're looking at returns way, way, way higher with no risk as opposed to putting your money in a paper asset like stocks. So this is one of the best investments you could make. We're the largest dealer of Argyle pinks. I literally buy as many of these diamonds as I can possibly get my hands on. And again, how do you sell them? Well, that's what is probably our biggest contribution to the diamond business, is that we created the secondary market that will resell our clients' diamonds. We own a company called 8 Siegel Fine Auctions. It's my company, and it's the only company of its kind in the world. It's a live virtual auction business, primarily to sell our clients' diamonds. However, we've used this auction for other auctions, and we raise money for charity using our auction. So it's a very, very exciting situation. At the last auction we had in May, we did it for the Susan G. Komen Breast Cancer Charity, raised an awful lot of money for them, but we had people that attended our auction from the comfort of their own home in Kuala Lumpur, in China, Australia, Europe, Canada, the United States, and the beauty of this auction business is that you can participate in a live auction and buy some of the most amazing pieces on earth, and you can do it from the comfort of your own home. That's why we've been on Bloomberg 4 times in the last year, and Fox, because of our auction business and how strong the rare colored diamond market is. You know, at the beginning of the show, we talked about currency. We talked about what's happening in Europe with a recession in Italy and Germany and what's going to happen forward and what's going to happen with different currencies. The fact is that rare colored diamonds can be sold in other currencies. It's a very unique asset in the extent that it can be sold in England for British pounds, Europe for euros, Japan for yens, and there's no other investment in the world like that. Gold and silver are primarily priced in U.S. dollars because they trade on U.S. exchanges. Stocks are traded in U.S. dollars. Oil is traded in U.S. dollars. And the fact is that those currencies are one-dimensional. But a diamond could be traded because of our auction business. We could trade in Europe and collect euros instead of American or Canadian dollars, which are worth much less. So again, it's a very, very rare opportunity. To be able to own a rare colored diamond, especially in Argyle pink, it's nature's art. It's like nothing you've ever seen in your life before. To hold a diamond in your hand like this is such a privilege because, again, it came from the Earth's surface. It came up through volcanic eruption, and again, these pink diamonds are just an out-and-out mystery. And what we do is we work with some of the top jewelers in the country, mostly up in New York, that make the most beautiful jewelry pieces, and our clients get to enjoy this beautiful pink diamonds or yellow diamonds or green diamonds or blues, whichever they want, and then we sell them for them at a profit when they're ready to do so down the road. So we're very, very excited about this. Obviously, what's happening in the pink diamond market is unparalleled. We'll never get another opportunity to do that again. As far as diamonds that are less than $50,000 to $100,000, the yellow flawless diamonds do extremely well. They go up by about 15% a year and never decline in price, and maybe 100 yellow flawless diamonds are cut a year, and that's for the entire world. I put away those type of diamonds for my children and grandchildren for their future. Yellow flawless diamonds start around 15 to 20,000, and they go up from there. If you get into a yellow flawless diamond that's over 5 carats, then you're talking a totally different story. They can go up tremendously. My wife's 14-carat flawless yellow doubled in the last 3 years. That's how much these diamonds go up in value. So, again, it's an amazing time to be in the hard asset market. I would think it would be a very frightening time to be in the paper asset market. Myself, personally, I don't trade the stock market or the bond markets. I don't have any money in retirement savings plans. Everything that I own are assets that I hold on to myself, and I control myself. I own physical gold, I own physical silver, and I own an awful lot of diamonds. And that's where I'm most comfortable because I remember, and I've traded these markets for 35 years, what happened in 1999 when the Dow plummeted and NASDAQ went from 5,000 to 1,000 and wiped everybody out. Then we remember 2008. The Dow went from 14,000 to 6,500 and wiped everybody out along with the real estate market. Bottom line is the investments that I'm in and my clients are in, we don't get that because we're not leveraging anything. We're not taking unnecessary risks and speculating. We own everything that we own, that we buy. And the fact is that, you know, gold may be down from where some people bought it, but we're not selling. We didn't buy it to trade it. We bought it as a hedge against protection, against inflation and currency devaluation. And that's exactly why we own diamonds also, because currencies are going to devalue, and diamonds are the best asset for that. It means that we could sell your diamond and pick up British pounds or euros, and you're not going to have any issues. In fact, you're going to make a profit on them. In fact, we're so confident in our business that when we sell your diamonds, we only work off of a profitable situation. If you make money, we get 10% of the profit. If you don't make money, we don't take anything. So I'm that confident in the diamond business, and we've expanded that business tremendously. We are the reason why there is an investment business in diamonds. We created it, we brought it to everybody's attention, and then we created the secondary market to resell it. Nobody else can do that, and nobody else even tried to do it. So, again, we're heading into a phenomenal direction where you're going to see a lot of people that trade the stock markets and the paper asset markets are going to get hammered again. There's no doubt that the stock market in the United States is only up because it's made to go up. The stock market would be at below 10,000 if it was trading on its own volition. If it was trading on what the U.S. economy is really doing, there is no chance in the world that the U.S. stock market would be at 17,000 at this point. It'd be below 10. So again, why risk everything that you have when you know that what's coming? You know that the stock markets are going to plummet again. You've got a recession in Europe, you got problems in the U.S. and problems in China. My suggestion is diversify. Get a couple assets like some diamonds put away in your portfolio that is going to protect you against all the things that are coming our way. You know, back in 1980, You could have bought a 1-carat yellow flawless diamond for $500. Now they're $20,000. You tell me any other investment that has done that well with the safety that you have in a diamond. That's why I buy them for my family, for my kids and grandkids, for their future, because I don't want to buy them assets that after 20 years have done absolutely nothing or are lower than where they are. I'm buying assets that are real, that they own, that they hold on to, that they can do something with in life, not like a paper stock.
And Harold touched on the stock market. Read one of the stories in our newsletter. 47% of the NASDAQ is in a bear market. That means 40%, well, actually 47%, almost 50% of the stocks on that index are in decline. Nature's art, that's the diamond world. The most secure and profitable investment, millions of years in the making, rare-colored diamonds. Nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio. Receive a free copy of our weekly World Financial Report on Radio newsletter. Go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022. And our featured diamond of the week, it is an absolutely stunning ring. And we encourage you to go to Rare Colored Diamonds, featured diamond of the week. Take a look at a .56 carat emerald cut, fancy intense, yellow, internally flawless diamond ring set in 18 karat white gold. It is absolutely spectacular. Would be a great starter investment for those starting a portfolio today. One of the stories in our newsletter that is a must-read is pink diamonds supply dwindling. Rio Tinto's Argyle mine has produced some of the world's most valuable pink diamonds during its 30 years of operation. But with limited reserves left and colored stones in high demand, the prices commanded by the gems it produces are expected to rise steeply. The mine, located in the rugged outback of Western Australia, opened its annual traveling exhibition in August in Sydney, the Argyle Tender, showcasing 55 exceptional diamonds comprising pink, fancy red, and purplish red stones unearthed this year. The stones will travel from, obviously, Australia to New York, Hong Kong, before the bidding takes place in October. And this is an event that obviously is very private. Just around 150 purchasers are invited to take part in the tender. But it's interesting to note, and Josephine Johnson works with the Argyle Pink Diamond Tender, and she's one of the managers. She says, accordingly, prices for pink diamonds have increased due to the rarity at about 10 to 15% a year. And as we mentioned before, between 2002 and 2010, the index price for diamonds from the Argyle Pink Diamonds Tender increased 108%, while white diamonds rose 22%. They say in the story that the Argyle mine really creates 90% of the world's pink diamonds, and it will shut down in 2020. And one of the experts that they consulted for this article, Ehud Laniando, who's a principal of the Mercury Diamond Company, he goes on to say that he believes demand for Argyle's top stones could soon outstrip supply, leading to soaring prices. He says Argyle's concentration of pink diamonds, its regular production of stones averaging .75 to .8 carats, and their superior color is not found anywhere else. Because the supply from Brazilian and African mines is less constant, no alternative source to Argyle is foreseen in the future. This, coupled with growing Asian demand for its pink diamonds, means demand for small to medium-sized pink Argyle diamonds could outstrip supply. So you're looking at a supply-demand story that we've talked about for quite some time. Read that article over, get it. It's in our free weekly newsletter, Pink Diamond Supply Dwindles. And one of the other stories that I think is very important to read, De Beers warns diamonds aren't forever. And they say that they're basically, in this article, that no new mines have been found for years. And it's a situation where, once again, Harold, we're talking supply and demand, no new mines, and obviously a lot of people becoming more interested in investing and owning diamonds in the Far East, India, China. You have a scenario that if you're investing in diamonds right now, there is a good chance, lots of potential to make money.
I believe so, Randy. Again, that's where most of my money is going. I know my clients feel the same way. You know, the thing is that if you understand supply and demand, which most of us do, understand how important this commodity is, this is an excellent investment. It's something that will do tremendously well for you and bring you a lot of joy because, you know, you get your statements at the end of each month, either you're up or you're down in stocks, no big emotion, no big deal. But when you take that pink diamond ring out of the safe and put it on your wife's finger and you're going out for the evening to a wedding or whatever, and the pride of ownership that you have of owning something that is so rare and so beautiful, it's just an amazing feeling. Again, I'm probably one of the most fortunate people to be able to play with these on a daily basis. To see the diamonds that I've seen in my lifetime and to think about, you know, going back and saying, you know, 15, 20 years ago, there was big blue diamonds and big pink diamonds, and nobody really knew, you know, how much the value of these were and what they were going to go to. You know, 20 years ago, you could have bought probably a 5-carat pink diamond, you know, for a fraction of the price that it is right now and seen, you know, thousands of % return on your money. So that's why this is such a great investment. Not only will we make money with it, however, it's also one of the most beautiful assets you could ever own. To see one in person will just absolutely take your breath away. So the thing is about diamonds, colored diamonds, is that they turn a color because of a mineral. For example, nitrogen will turn a diamond yellow or orange and turns, you know, white diamonds will come out of the same mine, but because a diamond turns yellow or orange, it's so much more valuable than the white diamond is. Uranium makes a diamond green. Most people have never ever seen a green diamond. They're ridiculously rare and go up tremendously in value. And boron makes a diamond blue. And blue diamonds over the last 10 years have gone up 1,000%. So that's how great of an investment this is. We now have the secondary market to resell them for our clients. And again, it's something you'll truly enjoy and hopefully make an awful lot of money with too.
Featured Diamond of the Week. Must see at rarecoloreddiamonds.com. Go there immediately, rarecoloreddiamonds.com. Featured Diamond of the Week, 0.56 carat emerald cut, fancy intense, yellow, internally flawless diamond ring set in 18 karat white gold. Can't urge you enough to get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com or 1-800-432-1022. Speak with him about our featured Diamond of the Week, but some of the stories that we have in our newsletter this week you want to read. Petra selling a blue diamond for $27.6 million. De Beers warning diamonds are not forever. The must-read pink diamond supply dwindles. And we have stories about Graf unveiling 2 spectacular diamonds in Paris. One a blue diamond, one a yellow diamond, and a 3.37 carat purple orchid diamond is being unveiled in Hong Kong. And Harold, we have about 30 seconds left. I think one of the interesting things about diamond investing, these are museum pieces. And in fact, in Los Angeles, they have a blue diamond that's currently on display.
You bet. Blue diamonds are so ridiculously rare. And again, they're getting even more rare, and the prices just keep going higher and higher. So, again, Randy, we couldn't be in a better position at this particular time. I'm very, very comfortable with the hard asset and the alternative asset market, much more so than paper. And again, I think going forward, we're going to do very, very well.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Take a look at our featured Diamond of the Week at rarecoloreddiamonds.com, a 0.56 carat emerald cut fancy intense yellow internally flawless diamond ring set in 18 karat white gold. Obviously, we're taping our show today on September 18th. We will know on the next show what happened in Scotland and what the financial markets did as a result. But we believe it's always time to have an insurance policy in your portfolio, hard assets, diamonds and gold. Connect with Harold at rarecoloreddiamonds.com. Call him at 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.